Hi, in this video I'm going to share with you what documents you need as a company director to get a residential mortgage. I'm Raj Bogan and I am a mortgage and life insurance expert for company directors. Let's crack on. So one of the questions I get asked all the time is what documents do I need? I want to get prepared, etc. And then I send clients a list, maybe they've got some or they haven't got others. So it's making it clear, it's actually not that complicated at all. Let's dive in. I'm going to show you on the screen what you need. Very simple actually. We've got the latest 2 years accounts. Now obviously it depends on your business. You might only have 1 year's accounts and it's possible to get a mortgage with a year's accounts, but there's a lot less lenders that will do it. It is even possible if you've gone from a sole trader to a limited company to actually get a mortgage straight away. Not many lenders will do that, but if nothing else has changed with the structure of your business, then that is possible to do. If you're a sole trader and you're an electrician and your accountant said change your company change it to a limited company, and you've only been trading for 6 weeks, then there are some lenders that will just go off your tax returns from the previous years. Anyway, latest 2 years of accounts. I'll go through each of them and I'll show you some examples of each one, what they are. Latest 2 years tax calculations, or otherwise known as tax computations, plus tax year overviews. 3 months company bank statements, 3 months personal bank statements, then ID and proof of address. So on top of that, there might be, if relevant, proof of deposit. There could be various other things needed, but these are the basics, what you need. So let's start with the company accounts. What are we talking about then? Okay, on here is an example of a company account, and it shows, if you've got a limited company, you should be pretty familiar with what I'm talking about. It's usually a document with a dozen pages. This is the main page that we're looking at because it shows what you call the turnover, and of course the profit, and then what tax is paid, and then what is after tax. So that's a key document that I need to work out, the state of your business and how much you could potentially borrow. Here's another example. This business, slightly bigger business, but yeah, gives you a sort of rough idea. So moving back to the original document, next thing is what on earth is a tax calculation or computation? So tax calculation this is your personal, I should have put on there, tax calculation, not the company. So first, here's an example of a tax calculation, and I'll show you in a minute where you can find this information. So it shows how much they've had from employment, which means like their salary. This one's a bit different, probably not the best example, but showing the different types of income they've got and the total. Very, very simple. Here is an example of something called a tax computation. It's essentially the same thing. It's a summary of what they've earned. So we can see 9,096 in employment and 40 grand in dividends, so it's approximately 49,000. The difference between the two is, if your accountant uses certain accounting software, then it produces something called a computation. If, however, they've done your tax return straight onto the HMRC website, it's called a calculation, and either they can get it for you, or if you've got your own login, which you probably should really get if you haven't, then you can download your own calculation. The final thing, if we go back to the list, is a tax year overview. What is that? Here's an example. It's a summary of how much tax is owed, plus how much is still owed, or it should be, obviously depending on the time of the year, it should show zero to prove that you've paid it. So where do you get these documents? Quite simple. I would just suggest going to Google, and as I've typed here, how to get tax calculation and tax year overviews. It's pretty straightforward. You can log into your HMRC online account, go to self-assessment, and then it'll direct you to your calculation. It used to be called an SA 302, self-assessment 302. But yeah, nowadays it's called a tax calculation, and you can print off the overviews as well, because lenders will ask for that. What I don't want, and what lenders do not want, is your full tax return. You might think giving more information is being really helpful. It's not, because it's just pages and pages and pages of information, and we just want to get to that summary page. As you saw, it's just a one-pager. So like I said, it's 2 years for that, and it's the personal tax returns, not the company. Company information you can get from the actual accounts itself. So the other stuff is pretty straightforward. 3 months bank statements of the company and the personal bank statements. Really, what you should be doing here is, if you, for example, you've got multiple bank accounts, you need to be providing bank statements for each of those bank accounts. If, for example, it's savings and it's not really relevant to the application, you don't necessarily need to show that, but speak to your broker. Another thing that some lenders ask for a company director is something called an accountant certificate to prove the income. I would always ask for the accounts and the company accounts and the calculations and overviews anyway. I can then get a full picture of your scenario. I need that for compliance. But in terms of when the lender asks for proof of the income, some of them, a lot of them have a certificate which they'll send out to the accountant, and the accountant fills this information in and signs it at the bottom, etc. It's pretty straightforward. So that's another way of proving your income. But for me as a broker, I'll still want the company accounts anyway. And the big thing for me as a broker, I can then assess which method I'm going to use and which lender I'm going to use to assess your income. Because most lenders will take what you've taken out of the company, so it's showing your personal income, so it's showing your personal tax calculation or computation, and whatever income and whatever total is on there, they'll average the latest 2 years and take that as your income. There are a smaller percentage of lenders which will use what's actually the company profit, the net profit, plus your salary, and go off that. It's your share of the net profit, I should say, not just the entire net profit, depending on how many shares you have in the company. That might be a completely different number from what you've taken out of the business, so it can obviously mean a completely different number. What you can borrow, it could be a lot more. So having both those documents allows me to work out, okay, what lenders are available, who can I go to, who's the best for how much we can borrow.